It's nice to see you guys. Now, I have a question for you guys. What if I told you that price is a lie? Would you believe me? Well, that is what the focus of tonight's video is going to be. And tonight, I'm going to prove why momentum and time is really the only thing you need to analyze when it comes to the market. And if you don't know what I mean by that, it's okay, because I will explain everything, both from a price action standpoint as well as an indicator standpoint with the momentum indicator. Momentum is one of the most important, if not the most important concept you need to master as a trader, hands down. It's so important that I'm taking an entire video to explain to you guys momentum in depth, a part of this 30-part masterclass series that explains my perspective on the markets, known as market mechanics. I'm not in the business of wasting time though, so let's get after it. Before we get into how to actually trade momentum itself, you guys need to understand kind of the basic concepts of why momentum is even important in the first place, and that is just going back to math class. If you look at a price chart, there are two measurements. You guys maybe have just forgotten this, but there's time on the x-axis and then there's price on the y-axis, right? And you guys are always taught that the most important part of this chart is the slope, right? We always were analyzing in math class this line in between, right? That time up here and price here equaled something, right? So that's the important thing, is that price action is the slope. Price action is that middle man. And what you're analyzing is momentum, right? A steeper slope, you were taught to be a, more aggressive trend, or perhaps even a faster moving car, right? You in science class, you always had those charts. Well, guess what? A lower momentum in the stock market, in price action, gives us different biases to what we're trading. For example, if you have a steep momentum, guess what trader we're going to be? We're going to be a momentum trader or a continuation trader, right? We're going to trade the direction of the trend. However, if you have a lower momentum, you're going to be a reversal trader, right? Because if the momentum is low now, then guess what? We're probably going to bet that if anything comes in, it's going to reverse very quickly, right? There's not a lot of momentum, so you can expect a reversal. And everything in between also has significant meaning, right? These are your range trades, everything else. And, screw the indicators, screw all that. This is super important to understand that, regardless of what zones you have drawn on the chart, they're going to break if momentum is strong enough. That is why price is a lie. It doesn't matter what support zone you have drawn here. If the momentum into that zone is too great, it's going to burst right through. And that's what you need to identify as a trader. Well, is the momentum, right? It's not, is this the right price? It's, is the momentum into this acceptable to take that trade? That is the ultimate deciding factor of trades when it comes to making good decisions. Now, taking this more towards that trading perspective again, moving off of that concept, you have kind of this visualized, is that when you have a trend that looks like this, right? Your kind of average trend is down like this. When you have a trend like this, you want to follow it. You want to keep shorting. So when it says, when a stock is selling off at a pace like this, you as a trader must join the trend by shorting or holding onto any positions, etc. So whenever you have a bearish trend in steep selling, this leads to trend continuation. You do not want to bet on a reversal here. This is an idiotic trade. 90% of the time you will get smoked. And again, no matter what support zones you have drawn here, the bounces up are not going to matter compared to the drops through. So momentum is what determines this. Likewise, if we flip over to the other end of the horizon, when we want to buy the dip or find the reversal trade, you want to find a stock that is being controlled in some sort of parallel. It's slowing down. The momentum is decreasing, right? There's not huge surges in the direction of the original trend. It's obviously slowing down. Comparative to this section right here, this right here is slowing down significantly. So this is an area where you want to be a reversal trader. Again, slower momentum, right? It's not declining as fast as this right here. That means these zones are going to be more valid down here, the support zones, and they are going to offer better trades. And then in the middle, we have a no trend bias. This is often when you have kind of a bearish trend, but extreme volatility, right? Or a bullish trend in extreme volatility. The main idea with this one is, if this is kind of your average trend, you have a lot of sporadic movements coming off of this trend, right? There seems to be no clear trend. Volatility has skyrocketed, and there's no real reason for this to go up or down. It's just choosing a direction. And this ultimately should be avoided as traders, right? We're not going to look for the crazy trades. Now, obviously, there's exceptions to this when it comes to range trading, right? And stuff like that. But as a basic concept, you do not want to be trading stocks with extreme, uncontrolled volatility. An example I can give of that is SMCI. You do not want to be trading this stock right now. This has no trend. It has no clear direction, no bias, no development to be making any clear decision. It's not speeding up, so we're not trading the continuation, and it's certainly not slowing down because there's still massive volatile swings. Before we move on to the next thing, I would be doing you guys a disservice if I didn't show you a few examples just so you understand the concepts I'm telling you. Number one, if I'm showing you something like this, and again, concepts change from time frame to time frame. The smaller the time frame, the smaller the targets, and the smaller the outlook. So just bear with me here, but this is from a price action standpoint. Don't worry about the time frame. Right here, if I showed you this right here, are you trading the continuation? What are you doing? Yes, you're trading the continuation. But if I show you something like, let's say, like this, right? It slows down. What am I trading? I am trading the continuation or reversal, right? I'm either betting to the downside or the upside here. Okay, cool. Where am I not trading? I'm not trading right necessarily in here. I'm not trading when the thing slows down. I'll trade on the back end of this, right? When it starts to expand in the range, but I'm not going to trade, that volatility like we discussed in that middle one. Similarly, if we're wanting to buy the dip, we could look at something like Home Depot, where previously you have a massive decline and then you start to slow down. Look at that, right? We're going to talk about structures here in a minute when it comes to buying these dips, but things slow down and then that gives those support levels more validity off of those lows. Boom, boom, right? We're buying these lows and we're not trying to buy this. Again, price doesn't matter. It doesn't matter if you had a support zone here. If it's smashing through at this angle, right? We talk about slope. There's time on the x-axis, price on the y-axis. The steeper the slope, the greater the momentum, and the less likely your zone is going to hold up. And in times like this, when the trend is obviously volatile, right? There's a lot of movements going on here, no clear direction. That's not something we really want to be partaking in, right? There's not a lot of clear decision making to be made here, right? You're guessing in here. You're guessing in here. There's no real, hey, this is a great idea. And that's important as an options trader for me, is because I always want to find trades that are slowing down for a reversal. And I always want to continue to trade stocks that are going in the direction or steaming through with a lot of momentum, right? I want to find things that slow down because as an options trader, if I want a big reversal, I best be betting on when it slows down so option premiums are cheapest. And also I can make the most instead of chasing it all the way up here. Likewise, if I want to trade the momentum on something, I would just want to play, shorter dated contracts, get those scalpy kind of moves in. It is admittedly harder to trade momentum as an options trader because you're always kind of chasing more expensive premium. But this is the idea, is that these kind of trends right here are your three basic rules of, hey, what should I be looking at here? A lot of you, without even noticing it, get so emotional that you blind yourself into believing that something dropping straight down is going to be a great trade to the upside. No, even if you catch the bounce, it will be shortly lived, most likely, and get sold right back to the low. So your chance of profit is so low versus something like this that you're trading the reversal, that it would be an absolute disgrace to your own trading system and your morals, and of course, your efforts that you've put into trading to learn this stuff to take that trade. And of course, there are times where markets do V-shape reversal like this, but it's very uncommon. So specifically, how do we get into trading this? Well, there's a few formations we can look at as from a momentum standpoint that we're going to try to spot to trade. And that is when it comes to continuations, right? We often refer to most commonly bear flags and bull flags. So your counter trend parallels is what I call them, where you have a trend like this, and then you have a counter parallel that forms. These are going to be these little movements right here, right? Typically off your support level. But again, the momentum is so great into that this bounce is going to get shorted and it's going to get clapped. So typically your bear flags, your bull flags, these are going to be areas that you want to look for. So we're going to look at bull/bear flags. These are the most common places that I'm placing trades. And again, that's a a bear flag. Here is a bull flag. Additionally, what you want to look for is chopping at the lows. Oftentimes you'll get a stock similar to this one. You'll get a drop, you'll get a bounce, but you'll get a short chop at the low, right? Here's your zone, and then you'll get a quick bounce or a quick drop once again through that level. And this is just what I refer to as chop at lows and highs. These are additionally what I'm always looking for to trade the continuation in a trend. And you'll notice that my entries are when things slow down, even if the bigger trend is massive, right? I still want to try to time my entries when things slow down just a little bit so that I can get a better price, but also be in a better risk to reward area. Because chasing here is a lot harder than seeing that bull flag and trying to play the continuation or final leg. All right, in this next part, the middle one, when we don't trade things, what does it look like? Well, it looks like extreme volatility, and you'll know it when you see this. These are things like craze stocks, things like news, things like wide distributions, that are, coming off a crazy uptrend or something. But typically, again, we do not trade. And the reason we do not trade these is because as an options trader especially, IV can be extreme on these. And what I mean by IV is that you have to get these huge moves to make anything compared to other stocks. So it just becomes not worth trading. And when you see this kind of stuff, it's often because of news, because of some hype like semiconductors and stuff like that. So do not trade these. And lastly, into trading the reversal, what do we look for? Well, there's a few different structures. Instead of counter parallels, which are over here, we like to look for trending parallels or parallels in the direction of trend. So we call these trending parallels. And these are going to be signs of a slowdown. And you'll see this to the downside as well. These are going to be where you start to enter and start to dabble into that reversal idea. You start to dabble into that, maybe take the shorts off the tops instead of, getting wrecked on the huge momentum here. We also like to be involved in accumulations and distributions for the big plays. Now, the hardest part with this one is timing. Everything here is hard to time, but we use charting. We use the tools we talked about in the last video and the tools we will talk about in future videos to help time the moves. But from a basic standpoint, you do want to be involved in the accumulation and distribution periods at some point for the reversal trade. And again, the momentum is the deciding factor of everything. The best way I can describe it is, again, if you have 3 zones, let's say stair-stepping like this, it doesn't matter what you think these zones have or how meaningful they are. If the momentum into these zones is great enough, they will smash through every single zone. However, the zones, think about them as timing points, as checkpoints. When the price enters this, is the momentum acceptable? Okay, probably not. This is super steep. So let's wait for the next one. All right, let that play out. Boom. Okay, you get into the next one. It starts to slow down, but still too steep. I don't want to take a stab at it. Okay, great. And then on the final one, right, when you get to the final kind of zone, you notice this, right? It forms a basing structure. There you go. That's when you take the reversal trade on that slowdown. So zones are like checkpoints. And this happened the other day on SPY, was when we went to right here. We had this massive dump, and you can see that the momentum into my zones was too great. I didn't trade this. Hell no, right? I'm not touching this massive smoke of a candle from this right here. Don't touch it. Don't touch it. I did not touch any of these reversal trades here. Many people did. That's why they got smoked. But also, right, earlier in that week, I did trade the reversal. Check this out, right? We gapped down underneath that zone, but we were chopping here. We were slow. We were building momentum. I did play that because the momentum slowed. There was not as much pressure as here, and I feel comfortable taking these kind of trades with obviously the data and the flow trades I had at the time. But this is the idea, is that I'm not buying this. I'm buying something like this, a chop, a slowdown, momentum curling, right? I'm buying the slowdown, the dip buys. That's the better trade, right? It's not this. The momentum determines whether your zones are valid. A lot of you guys just don't even see that, though. Now, moving on, we're going to talk about with momentum, specifically closes, right? We want to find a way to enter price action from a better perspective, right? I kind of showed you, we're looking for strong momentum to trade the continuation. We're looking for, weaker, slower momentum to trade the reversal, right? And so what we're looking at here is kind of that concept, right? When do we want to be involved in a trade? And when is that trade going to be like that middle section where we don't want to be involved? Well, number one, you can see I kind of rank these closes just based off how they are. So when a stock pumps and you close, and you'll notice these fib levels here. We will discuss that in the next video, how to properly use fibs. What you'll find is if you chop at that area, right in the middle, this is not typically a strong close. We would not refer to this as a, hey, I'm going to trade the continuation. It's, wait a minute, right? It's slowed down. It's chopping at the pivot level, which is halfway between. And, because they're either going to want to take it to the low or the high. So this is going to be an iffy close for me, right? It's like so this is more along the lines of a reversal trade. Like things slowed down here. And so we're going to bet, okay, is it going to continue or is it going to reverse? So we are considering 2 different directions here. However, when you look at a bullish close that's ranked 7 out of 10, you'll notice that we close towards the high. And that's important, right? Same thing with that momentum continuation. When something closes towards the high, that's still a very strong trend, right? The slope is still great, right? It might have, declined a little bit, but the slope has not decreased, right? The average of that slope is still very, very high, right? So we can assume that that's still very strong, and that's what you get here. So that's a 7 out of 10. Now, you can see with a 9 out of 10, this has an even tighter range towards the highs. Why is that? Well, again, this goes along the fact, we get closer and closer to developing just flags or even, chop at the lows like we talked about, chop at the highs. What you're doing here, if you watched our last video over liquidity, our last few videos, when you chop at a high, you drain the selling liquidity there. So this is a very bullish setup, especially considering that you gave little to no gains back from the original move. And then when it comes to the bullish close, you can see 10 out of 10, it closes that final part towards the very high without coming back towards the low, right? That is a very, very, very strong sign, is that not only did you close up at the high like this, but that final part closed even tighter towards the high. And for everything else, of course, you would just reverse the concepts, right? When you come down, you bounce up and you chop and you just kind of dwindle here. That's, is it kind of bearish? Yes, but it also kind of closed right at the pivot, right? It could be a reversal, right? Things slow down here. So let's go look at some closes and see where this would apply. Well, I can just show you by just looking at a price chart. Number one, when you have something like this. So right here, we have a drop, we have a bounce, and then we have a close kind of in the middle. You remember that being like, is that bearish? Is it kind of bearish? Yes, this one is still bearish because you do come down, you close right around that 50% mark. So this is essentially that 4 out of 10 one right here. This is right here. This is around this one or this one, right? Is that you're closing lower, you're dragging lower. Okay, so this is pretty good. Additionally, you have, once you come back towards the low, right? So you come back down towards the low and you chop at the low. That's more like this one, right? So now you're at the low here, you're chopping there. That's exactly like 9 out of 10. And the odds of you breaking that low are very, very high now. So this is how you apply these concepts, chopping at the lows. We discussed this. Everything in the series is going to be building off of each other, but we discussed all of this. And again, notice how I'm not looking at price. I'm not labeling you guys, this is at 422.50. I don't care. Remove the price chart and I would still be able to trade because what I'm looking at is momentum. I'm not necessarily looking at the wick is bigger on the bottom and the wick is bigger on top. No, I'm analyzing what is the story of the markets. Is it a strong story? Is it a weak story? Is it an ill story? Is it a story of, continuation? What is the story? I'm going to play along with that story or I'm going to predict the next chapter. That's what I'm doing, right? When a story is slowing down, of course the authors are going to keep you, nice and entertained by adding a plot twist, right? That's it, right? You trade the reversal. That's all you're doing. And so when you have trades such as, slowing down, what does that mean? It looks different on everything, right? So we have a move down, big gaps, pump, come back to the low again. Again, this is chopping at the, smash through the low. You get a bounce here. Okay, this is very bearish. Closing at the low, right? We talked about, closing at the low. That's very bearish. It might not look like this exact price action structure, but it closed at the low. That's the same thing, right? You had a big downtrend and you close at the low. That's the same exact thing. And so what does slowing down look like? Slowing down is when things stop doing what they were before, right? Your slope is no longer this. It's averaged out to be this, and then it's slowly going like this. Things are slowing down. The average is increasing, and you'll notice that the dips are now being bought, right? Where is this seller? Where did this guy go? There's not a single big red candle like that anymore. That is the momentum, right? The momentum is changing here. You liquidated, you came up, and now you're slowing down. Look at this, right? Look at this slowdown. You have a slowdown. And we're going to talk about what the structure exactly is. This is the market maker cycle. We'll talk about what this is in the next video, along with the advanced, Elliott wave structures like that. But you guys need to get this concept down. When it slows down, you are now a reversal trader. When this momentum is up and it's strong in either direction, you are a continuation trader. You are not betting on a reversal on that. Same thing with NVIDIA. How many people do you think got smoked this year shorting NVIDIA? So many people. This right here is a do not trade on a macro perspective, right? If I was looking at this from the daily, it would be do not trade, all right? But what you notice is we have a strong close, chop at the high. This is a structure I want to trade, right? That's something, right? We talk about, we want to typically be involved towards the tail end, right? When we have that expansion and you have an expansion, chop at the high. That's very bullish. And so you would want to trade something like that. This is the no trade zone. And even people who were trying to short this all year, how many people did you see on Twitter going, short NVIDIA, the bears, right? They're sitting here, short NVIDIA. Everyone's shorting semiconductors and it goes up and up and they keep trying. They go, I'm going to short it again, up and up and up. And I had to literally scroll out to see the proper chart. But this is a no short zone. If you're going to be short, where do you want to be involved? When it slows down. So this is somewhere we want to be involved, right? Close at the low, something like that. Now, I'm not saying even that's a good trade. I'm not saying, find a ticker that looks like that and trade it. No, we're going to teach you how to find what the good trade is. But right now, from a, face value perspective, this is a bearish, this is slowing down. Things are slowing down. Do I think it's enough yet? No. But you want to be involved shorting here. You do not want to be involved here. So I know a lot of people are going to be confused by this, and so I'm just going to explain it quickly. But when you have something like this, you go, okay, well, Rader, you said, you want to consider shorting at a slowdown, but then you say if it chops at a zone here that you can bet on the continuation. Yes. What I'm telling you to do is take in context. I'm telling you to take in context because that matters. What data you put on the markets is going to determine your bias. So for example, you see people out there going, oh, the market's going to crash. Yet you have people over here going, oh, the economy is going to boom another 20, 30% on the stock market. Okay. Whatever data you're looking at the market is going to change whether something like this right here is a chop at the high and that you want a long, or it's going to be a chop at the high and you want a short. What I'm telling you is that momentum tells you where you can consider these ideas. So is this short necessarily violating anything? No. This is still a very strong move. It's a chop at the high. It's likely to break. But something like this, right, when it does slow down significantly, that's something that you want to consider shorts in because this integrity of the move has changed, right? The whole dynamics of the market has changed. That's where you can consider shorting. Whether you short or not, whether you trade the reversal or not, that's where you consider it. That's when you consider it. And then you pair it with your zone saying, okay, if I were to short off this, where would probably be the best area? Where would be the best zone, etc. So it's going to change based off how you view the markets. But what I'm telling you is just use common sense. That's the best way to trade. It really is. Just use common sense. If you look at this and say that's bearish, it's not. You know it's not bearish. You know that this is still very strong. Wicks being bought up, everything else. Use common sense. It will get you very, very far. Now, I want to save this for one of the last things we talk about because a lot of people get caught up in this indicator world and they think that this is how you trade using indicators and all this. Let me tell you this. I do not use indicators very often, and if at all, in most cases, because number one, most indicators are the same data. Number two, indicators do not help you understand the dynamics or mechanics of the market. The whole point of this series is to show you how the markets actually work, and indicators aren't really a good judge of that. So what I'm showing you here is the momentum indicator. It is ticker MOM, not ticker, excuse me. It is MOM. Just go to your indicators, type in MOM. It is the basic, just 10 setting, basic setting. Don't change anything. But what we're going to talk about is the momentum indicator because this kind of helps you get the concept across. Although you should be able to spot this as you mature as a trader and as you kind of understand my perspective, I don't need the momentum to spot this stuff. It's very easy to tell kind of what is going on in the markets. But essentially, what the momentum indicator does with the stock is it helps us in times of consolidation. And there are a few rules with it, is that when we have a trend going up, traditionally, right, very traditionally, if we want to trade a reversal, we want the momentum to go down, or at least stay down, or set lower highs as the stock goes up. This is known as divergence. So we want divergences to occur for reversals, okay? So this is the most common way of trading. You have a stock going up. So here's the stock going up. You preferably, in an ideal world, want to have the momentum going down, or at least holding lower levels. It doesn't always need to be an exact downtrend. You'll never get the split opposite that most people think. You'll never get like this, right? But what you will get is something possibly like this, where it's, up, you get another high, and then it just starts to, as the stock goes higher, momentum significantly lowers, right? So something like this. That, in most cases, will lead to reversals. However, this indicator specifically really helps when it comes to consolidations. okay? And how it helps is whenever the markets consolidate, what you want to look at when markets chop and stuff like that, what you want to look at is, does momentum go down or up? Because this is a huge part of trading and finding areas where it's optimal to trade, whether you're betting on a reversal or continuation, like I said. What I mean by that is, let's take an example on, I don't know, XLC perhaps. If we go to XLC right here, what we'll want to look at here on, let's just use the daily time frame here, is that when you see a chop in the market, does momentum go down or go up? If momentum goes up during chop, expect an expansion down or up. Again, if momentum goes up or holds a higher level, when the stock chops or slows down, that is indicate of a expansion to come. Down or up, it doesn't matter. Not up, not down, it's just down or up, okay? Momentum has to maintain higher levels though. Likewise, if momentum goes down during chop, expect fake outs, okay? So if momentum starts to drop during a chop, you can expect a pretty disgusting fake out in one way or the other. Now, this is a pretty unique way of utilizing momentum. Not a lot of people talk about it, and I don't even know if many other people know about it. But using that principle, if momentum goes up, expect an expansion, down or up, right? And so what we're looking for here is, you know, are we bearish, are we bullish? But this is a place to trade. This is where we can expect a clean expansion or continuation. And so what you'll notice here is that we had a drop. We're not looking for one-to-one correlations on momentum. We're looking for where they slightly do their own thing, chop or go down, whatever. So when you look at this, when the price chops, excuse me. So when you have this, you have a chop, okay, and then momentum goes down with the stock. Okay, that's not anything. But the next day, you'll notice we went up, and then you see momentum absolutely skyrocketed, right? We went from here all the way over to here. Big jump in the momentum. This is an area we want to be involved for an expansion, okay? Down or up. This could have gone down or up. Likewise, when you come over to here, you have a dump. Okay, is this anything? No, it's pretty much one-to-one correlations. There's nothing going on here. However, check this out right over here. You had a drop, okay? Then you had a drop, chop. And what do you notice during this chop right here? The momentum died during this chop. Went from here all the way down to the bottom here. So during this chop, it didn't really break any lows or anything. It went down all this way. We can expect a fake out then. So when you do gap down, you buy the dips. You buy the dip back up. That is a fake out. And so when you come back in, now you normalize. Now there's nothing really to be concerned about, nothing really going on. And so we can keep this process going. So again, here's the expansion theory. You have a chop right here, a couple of chops, right? And you have momentum going up. And on that, when the chop and momentum goes up, you can expect an expansion. This obviously went to the upside and you got a clean move there. However, when you have something like this, where it's chopping and momentum is going down right here, you can see it broke into new lows while the stock did not during this chop. Guess what? Expecting a fake out. You drop down, buy the dip. Utilizing this method, whether you have extended hours on or off, I have them off currently, but again, it doesn't really matter. You can use on or off. Same principles apply. Using this method, you can better spot areas of expansion, areas where you should be involved, and that kind of helps guide you. Now, again, I say this because I already know where stocks expand just by my knowledge of the market mechanics, how the markets move, stuff like that, which I will be teaching you guys later. But this is a great beginner way to kind of analyze this. And I encourage you guys, just watch price action with this tool. Don't change anything. Just go watch it on the hourly or whatever. Go back test. You can back test and just see what happened, right? Can I see what happened? Can I predict what happened without hindsight? Can I go into replay mode, see if I can spot it, and boom, right there. So this is how I use the momentum indicator. I specifically look for chops, but again, divergences are the traditional way of spotting things. You have, a stock making higher highs while momentum made lower lows. You see right here, momentum tops here. All the way up here, you have another low in the momentum, and, well, you start to break down. That's a divergence. You would typically look for a reversal. So that was our discussion on momentum. Although very basic, I need you guys to remember that the markets is not about price. It is not about what my zone is. It's about the momentum. It is about, finding data and relating this data into helping us time moves better, right? I always say this, but price action charts are one of the last places where we should be ending up to find a trade. You should have a bigger idea. For example, okay, seasonals say huge drop in August. Okay, when we're finding a drop, we need to go find the names that are going to drop the most. And once we have found those names, we are going to look at them from a momentum perspective and try to time an entry. And that is going to be finding areas where momentum slows down, where it's already slowed down, and where we can expect it to speed up so that we can add now or trade into that speed up and then continue to trade that speed up as it goes. But I need you guys to remember that momentum is on the higher end. You are going to be a continuation trader. On the lower end, you are going to be a reversal trader. And in the middle, you're going to be trading ranges. You're going to be doing all this. But you guys need to understand the concept of momentum, why it's so important, why price is not as important as you think, why price action, each little candle is not as important as you think, and that the overall story of the market is the dominating factor which determines profitability. If you become good at reading this story, you will become a very, very good reader and most importantly, trader. And if you ever question my ability to trade, which is a valid question, I was raised better than to go around flaunting my profits, my success to everyone. However, I love to show people my performance, my ideas, my thinking. So I've created the Rader Report to show all the trades laid out beforehand, a whole week in advance. I post these every Sunday and every single monthly expiration date for the monthly perspective. All my trades, entries, exits, charts, ideas, data behind my trades, everything in an organized fashion, both to the upside and downside trades. And additionally, since I'm not scared to hide my performance because I'm confident in what I do, I mean, this is what I do for a living, I archive all of them so you can go and look at my previous reports as well. Additionally, you get all my charting, but for free, no cost to you. You can sign up with the Rader Report for free, and you can get my SPY chart. I update this every single day, but the zones I post every single week, as well as the original thesis that I have. We also do have a Discord. It's invite only. I only let 2 people in every single month. There is an interview process because, well, this is a huge time commitment and there's a lot of professionals in here. We uphold you to a high standard of focus, passion, and dedication. If you want to apply to that, you can go to my Instagram and there's a little highlight reels, a little highlight story section right under my profile. You'll see it and you can apply there. Have a great one, guys. Peace.